Hello, everyone, and welcome to this Silicon Valley Innovation Center interview. We're very glad that you could join us today. So we're going to have a really interesting and exciting conversation with Johnny Ayers, who is the co-founder and senior vice president at Secure. And our topic of discussion today is digital identity verification, a topic which Johnny knows very much about. He's with us now on the line. Johnny, thanks so much for coming today. And I want to ask to start, if I may, about digital identity verification, the problem that digital identity verification seeks to solve. So, and one of them, which I know of, is identity fraud. And so, can you just tell us a little bit about identity fraud, how that is affecting businesses today?
Yeah, absolutely. So, I mean, I think pervasive across the internet, there's a common euphemism that it's hard to figure out, if you're a dog on the internet, right? And so, whether it be mobile or web or call center, basically in a non-face-to-face interaction, it is very difficult to verify that this is actually Johnny and potentially someone faking or some synthetic version of Johnny. And so when you think about kind of digital identity verification, it's basically verifying that this is the real individual presenting their identity for a particular application, for a particular transaction throughout kind of the end-to-end customer lifecycle journey, right? From enrollment to login to like kind of ongoing authentication for transactions. So, when we think of a digital identity, it's really kind of all touch points where Raheem is basically trying to present your identity to an Amazon to buy something, a Bank of America to open a bank account, or to Lemonade where you're making a claims, request. So
Sure.
digital identity is kind of pervasively important end to end for basically every identity related interaction on the web.
Sure. And I mean, what if companies don't necessarily understand the gravity of this, of how important is identity verification? I mean, if they get it wrong, people impersonate other people steal other people's identities. What can happen if they use these, and a company could be fooled by this? Could they not?
Absolutely. I mean, I think that we think of it as kind of a three-sided problem, right? One is an acceptance problem. The second is a fraud problem, right? And the third is a friction problem, right? Or user experience problem. And so, it's really easy to have no fraud. You just don't do any transactions or applications, right?
Mm-hmm.
And in that situation, you don't have a fraud problem, but you have an acceptance problem. Right.
Cool.
The second way is, you just manually review or subject the customer to huge amounts of friction to solve the fraud problem. Right. But then you have a massive operational cost and you have an acceptance problem. Right. And you have a lost revenue because a lot of your customers probably abandon the user experience because it's onerous. Right.
Yeah.
And then the third situation, which is, you accept everyone. You don't have a friction problem, right? But you have a massive fraud problem because you have no kind of controls in place. And so the idea is to try and find, on the internet, using new types of data, new types of tools, how do you optimize and find that kind of perfect balance between the three? Because, if you don't, you have, lost customer revenue through acceptance problems. You have kind of cost and lost revenue through friction, right? Or you have lost kind of OpEx through fraud losses. So it's not any kind of one individual problem. So those are kind of the corporate problems. And then obviously the consumer problem is the fewer controls that a company has, right? The more likely it is that their identity is going to be stolen and used in some nefarious ways. And also the weaker tools that a company has, unfortunately to a user, where we have endless numbers of options, right? With who we bank, who we get insurance, who we get our phone from. It's about delivering really good, seamless, passive user experiences to those of us that are good consumers on the web.
Yeah, I mean, so for us as consumers, we don't really want to feel this identity verification process, do we? We just want it to sort of to happen. And I mean, for us, when we know we're perfectly legitimate consumers and we're actually not trying to, be fraudulent or parade as someone else, we would quite easily get frustrated, wouldn't we? When someone keeps trying to verify and check who we are, we just say, look, we know who we are. We're saying it. We're telling you why are you having to do this?
Absolutely. And so there's the customer friction and like the happiness factor of a user experience, but there's also like the real revenue loss, right? If you're paying a couple of $100 or a couple $1,000 to acquire a customer and then they abandon the application, that can be tremendously expensive. And then obviously on the other side of the coin is like, you just issue credit cards to everyone who applies and you have a massive fraud problem. And so this is really why it's kind of this balancing act and this equilibrium with how do you balance, really seamless user experiences with obviously fraud and risk controls.
Sure. I mean, presumably now this is becoming more and more sort of an issue. I mean, it's sort of coming to the attention of companies more and more. I mean, as more businesses are mobile first and have digital at the heart of what they do, the question of identity is for them a central one. I mean, do you see that it is becoming a central question for businesses? They understand that they need to get this part right?
Yeah, I mean, as it relates to Socure, I mean, we're seeing a lot of 2019 strategic initiatives coming from, the C-level down, stating, we have to solve, we have to improve our acquisition flow, we have to cut down on customer friction, and we have to cut down on the number of people we're manually reviewing or queuing or putting in these pending statuses, because as digital kind of has the ability to be exponentially large, right? When you think of a Chase or a Chime or a Stash, like there's no limit to, aside from the number of consumers, right? They could basically have in applications or in transactions in a month on the internet, right? Which in branch, you kind of have a limiting factor of people. On the internet, you can scale as much as you want. And so, the kind of gating factor for a lot of these digital institutions is if they don't have the proper technology and tools in place to be able to scale, right? I mean, the city CEO said, he wants to, bring robotic process automation to 10,000 ops jobs. And so it's just purely an automation play, which is how do you bring new technology, new tools into driving down the human as kind of solution that's being implemented today and bringing new technology into play.
Mm-hmm. And so, and Socure, you guys do this, right? You use software or machine learning or AI to try to alleviate the burden of like man hours that would be needed to identify people online. And
yeah, absolutely. I mean, so we viewed digital identity verification, right, as a classification problem, right? There's bad applicants, right, or bad transactions, and good applicants and good transactions. And so we believe that machines are very good at solving classification problems, right? Identity verification is a classification problem, and so we've spent the last 6+ years honing our data, our features, our models, really in being able to like very, very accurately classify. Is this Johnny or is this someone pretending to be Johnny, both from a regulatory and a fraud risk perspective? And so, we're, very fortuitous timing for us in that, many institutions across all verticals really are looking at how do we decrease friction, right? How do we increase automation? And how do we increase our accuracy in these kind of passive decisions throughout kind of products as well as the customer lifecycle journey. And so, yeah, we feel that we have the ability, with data science and with our kind of application of our technology to actually uniquely solve the acceptance problem and the fraud problem and the review problem in like a single unified, very accurate solution.
Yeah, so you're pretty confident that the algorithms are good enough to be able to identify the good from the bad.
Yeah, I mean, the nice thing is it's not like a gut, right? This is very easy to quantify, right? Institutions know historically who's good, who's bad, right? And you can run regression tests to quantify capture rate, false positive rate, a false negative rate, right? It's pretty easy mathematical exercise to validate which solutions actually solve the problem, with which solutions are just have good marketing.
Okay. So there is a lot of historical data there to leverage.
Yeah, absolutely. I mean, if you think about it, an institution, right? Chase or Wells Fargo or Verizon or an Amazon, these guys have 20+ years or 100+ years of historical customer data,
right.
And so you can look back 3 months, 6 months, 12 months and do a regression test to say, hey, these are the people that were good, these are the people that were bad, which are services that can better help me kind of classify those actors and at what accuracy, right? At what false positive. And so on the web, solving that acceptance, fraud, and automation problem is just one of accuracy, right? It's one of bringing efficiency into these clients' kind of analytical capabilities, which drives down OpEx costs, right? It drives top line revenue and just brings kind of efficiency to the entire organization versus, many of the legacy tools, which are very friction heavy, using tools like KBA and out of wallet questions, which are just antiquated and just are not fit for scaling an organization on the web.
Sure. And so just maybe talk me through it. So if I'm a consumer and I'm signing up with a new bank or, whatever it may be, mobile phone possibly, and they want to verify my identity, they're using something like Secure. What do I see? What do I feel? Do I have to provide them with a lot of information? What is the system sort of pulling down to know who I am or to verify who I am?
For sure. Yeah. So if you think about a standard application that you'd fill out on the web, right? You'd provide the name, the email, the phone, the address, date of birth, possibly social security number. And so using that information, we're able to in real time generate thousands of predictors related to, your email address, your phone, your IP, your device. And so this is what we've spent years and years and years doing data analysis and feature engineering to figure out, what data elements are predictive, what data elements provide either positive or negative correlation to verifying that this is actually Raheem. So to the end consumer, you never would know Secure exists. Basically you're, relying on the institutions to say, hey, I'm giving you this information so you can positively verify, I'm the real applicant to whatever services is that you're delivering. And so it's really the institution today who's our main buyer. But for the consumer, they should want, a service like Secure to be deployed at the institutions that they're using, because they know that, that companies buying and deploying, best practice machine learning capabilities to verify that, like, Johnny's identity isn't being stolen.
Sure.
And so, there is kind of this, view for us, which is, the more companies that are deploying technology like Secure's to verify identities, like the lower the probability is that my identity is going to get stolen.
Right.
And so, so to a consumer, it's passive, unless they're using kind of a legacy incumbent tool where they throw lots of friction up in front of you, right? Which is, hey, which of these 10, mortgages or, which of these 10 companies under your mortgage, right? Which color was your first car? That is a ton of friction that you would see today that we're helping to replace using passive predictive analytics. And so
it's like interesting, this question, like the more companies out there who start using digital identity verification platforms, the sort of lower the risks are of us as consumers having our identity stolen. And I wonder if you could just tell us a little bit about the kind of background to this. It sort of puts me in mind of this, the fact that, historically, a lot of institutions might have relied on information coming from credit bureaus to run these background checks on individuals, but that sort of information is, as I understand it, somewhat compromised. Is that the right way to think about it? You can open that up for us a little.
Yeah, I mean, and I wouldn't say unique to them, right? I mean, if you look at the breaches that have occurred, right? Yahoo being the largest breach ever, right? Recently in Marriott, which was, I think, the third or fourth largest breach ever, where you had, not just data from the bureaus, but you had, passport information and credit card data. So, I think that in the last 2 years, you've had like 3,000 breaches, right? So it's not any one. I think that the data breaches definitely have made the problem move from like kind of a director, VP level into the boardroom and saying, hey, what are we doing to combat ourselves against kind of this growing risk of identity theft? And so, I think that the legacy way of solving the problem was using kind of linear rules-based if-then statements, to be able to positively verify that 50, 60, 65% of people that have credit, right? But then you have a whole, 35, 40% of the population, at least in the US market, that doesn't use credit at all, right? Which is send file. And so, our approach has been to how do we leverage all data available, utility records, telco records, energy records, right? And then as opposed to writing, kind of static, if then, hundreds of rules, we can leverage, gradient boosted machines and support vector machines and logistic regression, and like newer forms of machine learning, to look at this massive amount of data, to verify it's actually, the regime that we believe it to be, right? And that's not just looking at data from credit. It's not just looking at email data, just looking at phone, just looking at device. It's looking at it kind of holistically, to make a really, really accurate determination that this is actually, the real consumer that we believe it to be.
And can this process tell us anything about the risk profile of a consumer, or is it purely just about they are who they are and whether or not they'll be able to keep up the payments on this loan or whatever it may be? Can we infer anything like that?
Yeah, so I mean, different solutions solve different things, right? As you start to get into like credit and insurance and employment, then you're starting to move into, fair credit, FCRA territory. And so I think that the differentiation between, kind of GLB and FCRA, at least here in the US, right, is really related to credit decisioning, really kind of adverse actions, right? So if we're making a credit decision on you, and for some reason the institution decides not to extend you credit, they have to, as a consumer, they have to tell you why, right? And you have to have the ability to remediate that decision. Whereas for us, we're basically saying, hey, this is either Johnny or it's not, right? And if it's not, right, they typically will ask either for you to provide more information or to come in and provide some additional way to verify yourself. But, the identity decision is very different than, an identity or excuse me, a credit or kind of employment type risk decision.
Sure. And speaking, you mentioned earlier sort of a part of the population which is thin file, and I wonder if we could just explore that a little bit. I assume sort of make the connection here with Generation Z. I don't know if that's the right way to put it, but sort of younger consumers who don't have, aren't taking credit as much. And I just wonder, do you see that as being a sort of a generational shift where people just don't want to take credit as much anymore for a certain, I don't know, cultural reasons perhaps, so their attitude towards it has changed? Or is it some kind of chicken and egg situation where they're not able to be verified in the first place, and therefore, further down the line, they're not able to sort of get credit that they might have otherwise been able to get?
Yeah, absolutely. I mean, this kind of fits in the conversation around digital identity, right? Which is, historically using credit data is how people have been doing identity verification, right, for the last 20, 30 years, right? And so the problem is that in our generation, right, I'm a millennial, and you have a huge amount of student debt, right, which has never existed before in the order of magnitude as today. So, if I'm loaded with student debt, the probability that I'm going to put more debt on myself, whether it be personal loans, credit card, auto loans, is substantially less. So if there's a lot, you could look at, there's a lot of statistics that basically shows this like massive jump in debt at a much younger age than what previous generations have seen. And the majority of that debt's was student debt, not traditional credit cards or loans or auto financing. And so I think what that causes is you've created like a kind of cash and debit economy, and you've created a lot of people who are really kind of negatively impacted by credit. And so what that's had as it relates to digital identity is it's the hole within traditional tools where they're looking at credit data has become even larger, right? And so that is why companies like Socure have kind of come into the fold, which is like, how do you positively verify all of these people? And we believe you do it with kind of expanding the types of data that you're able to use to verify people. As it relates to younger people getting access to credit, there's a lot of like fascinating companies like Pedal Card and Deserve that are going after folks that have no credit, right? So they're doing debit underwriting. They're looking at in super interesting ways of like securitizing a credit card against a debit or savings balance. And so I think there's a lot of like really interesting models coming in to like help people get into the credit system from companies, like Chime, that are being really innovative in their consumer services But obviously, to verify all these people on the front end,
Sure.
you need a kind of best-in-class digital identity verification solution. And so that's where we've been very fortunate to fill that void in the market.
And just thinking about opening it up to use more data, it seems like this is a good thing, because other sources of data which may now be compromised due to all these leaks we can kind of get around those. Is it at all a problem, like the digital data that you use? Is it hard to fake that as well? I mean, can it be faked? Does it just become more difficult just because of the sheer volume of data that there is now? And you simply can't, if you want to steal someone's digital identity, so to speak, it's just that more difficult because there is so much to cover.
Yeah, absolutely. I mean, and I think there's a lot of different authentication mechanisms, right? Like, so if I steal your email, right, the email could come to you, right? If I steal your phone, right, the out-of-band SMS will come to you, right? If I'm, it's really hard for me to spoof your device, right? And so basically what we're seeing is like, to look at a name and an email and a phone and a device and a date of birth and an SSN, like the probability of people stealing all of those for a single applicant, it's incredibly expensive, right? And then you have to take over their email and you have to take over their phone and you have to be able to spoof their device. So the idea is like, basically, if you're taking this 360 view, right? And Secure thinks about consumers in kind of this 360 way, it becomes cost prohibitive for fraudsters to try and steal everything, right? Because what they're basically trying to do is they're buying lists, right? They're basically buying database lists, right? They're buying lists, or what's called fulls, where they'll buy all your PII and your credit card information. And then they're just writing scripts, right? And so they're just hammering all these different websites, trying to figure out, the path of least resistance, right? They're basically like water. And so the idea is that the larger amount of data, the larger graph, right, where you look at my email's connected to my phone's connected to my IP, my phone's connected to my device, my phone's connected to my address is connected to my email, my address is connected to my IP, the address is connected to where I live on social, right? You start to build this like massive kind of 360 view of a consumer. It becomes very, very, very not only difficult, but very expensive to beat.
It's really so interesting, because I think we all use so many digital services. We're all online in different places. We're leaving data trails, I see them all over the place, and we may not even be aware of them, but it's all out there and it can all be sort of pulled together. Do you think, I mean, is there cause for thinking that at some stage in the future we are going to sort of be curating this digital identity a bit more consciously, like in the way that we might check a credit report on ourselves? Can we look at our digital selves and have control over this and be more aware of it?
Yeah, I won't give you too much insight into our future roadmap, but I think that at some point in time, I think there'll have to be a single source of kind of trusted identity on the web. That is our goal, right? I mean, I think Secure wants to become the single source of trusted identity across the internet. And I think to do that, you need to have certainly not only consumers' trust, right, that ethically you're doing everything in their best interest, but I think you also have to have not only the scope and breadth of data, but you also have to have the analytical capabilities to verify all these different facets, right, that this is actually Raheem. And so I think that it's interesting. You look at kind of like a GDPR, right, and some of the new privacy regs. And I think there's certainly a lot of benefits to consumer privacy without question. I think it's to be seen, what impact those will have to user experiences, right? And what that will mean for people on the internet. And so if it's like, hey, you'd like to open this bank account, sorry, we can't do it on the web because we don't have any data on you. You got to come to the branch, right? And then there's actually, kind of the pendulum swings the other direction, which is because none of this data is available, it becomes, prohibitive to deliver all the services that we've become used to using on the web, because a lot of this data. And so it's kind of interesting debate from the regulatory side. I think, to many of the large enterprise, over the past couple of years with the data breaches, we've seen the amount of scrutiny, that comes to companies like us that touch PII. It's been really refreshing as a consumer to see the depth and breadth to which a lot of these companies are putting us through the infosec and compliance and audit ringer prior to doing any type of testing or API integrations. And so, yeah, I mean, I think the industry is definitely moving in the right direction as consumer privacy becomes more and more topical in everyone's minds.
Fantastic. Well, Johnny, thank you so much. I think that's a nice note to end on. We're sort of looking ahead, and obviously you're optimistic that the balance will work well from all sides. For consumers, for enterprise, and I'm sure Secure will be right in the mix there with things, and helping make it happen. So, Johnny, thanks again. It's been brilliant having you on the show, and we appreciate you joining us today.
Absolutely. Thanks so much for having me. Great talking with you.
Thanks. And thank you very much to all our viewers out there who have joined us today for our talk with Johnny Ayers. We really hope you've enjoyed it. And if you are interested in finding out more about fintech, about digital identity verification, about the ways that technology is affecting the whole range of banking and finance services, although not only, then please do check out our website, siliconvalley.center. We do a program at Silicon Valley Innovation Center called Navigating FinTech Disruption. And can really help you get to the heart of everything we've touched on today with Johnny. So do check that out. The next run of the program will be in April, so still plenty of time to register and to find out more. And so I think on that note, that's where we'll wrap things up. So just suffice it to say thank you very much from me, and also from my guest today, Johnny Ayers, and we will see you again very soon. Bye-bye.